Good afternoon, everyone. Rich Swerbinsky with the Mortgage Collaborative here once again with the last week in Mortgage Today, our weekly whirlwind through all the latest and greatest in the mortgage industry. And normally I am joined by one of our lender members each week as my co-host, which everybody should know by now. But this week we decided to do something kind of special. Been very fortunate to add some great people to our team, and we had a great team. So our team has the benefit of interacting with our lender members and our preferred partners nationally just throughout the course of their day-to-day roles with TMC. So wanted to get some of their perspective on what they're hearing and seeing and feeling from the network on a lot of the key issues that mortgage lenders have on their minds right now. And we'll go through the news headlines as well, as we always do. And as always, encourage your interaction throughout the show, especially today without a traditional co-host. So any comments, thoughts, questions you have, feel free to put them in the chat or the Q&A, and we'll go ahead and incorporate it into the show. So let me start by introducing our team members, some of our team members, our SVP Business Development, Tom Gallucci. Tom, good to see you.
Hey, Rich. Thanks for having me.
In Tom's role, he manages our preferred partners, our events, our marketing endeavors, and a whole host of our emerging tech fund reports in through Tom. And Tom has been with TMC now for, it's coming up on 6 years, right?
Yeah, it'd be 6 years in May. It's crazy to think.
Hard to believe. Yeah. We had only it was like 4 years ago, 3.5 years ago, we had like 3 or 4 employees, and now we have 17. So we must be doing something right. So our Vice President, Member Engagement, Faith Howard Mooney. Faith, good to see you.
To see you too. Hi, everyone.
Faith's role with TMC, no small task. She oversees the engagement and the awesome treatment and the benefits that our 263 lender members nationally receive. So, and Faith has a great team, member benefits advocates that works for her that helps along those lines. So Faith's going to give us some perspective that she and her team are just hearing from the member base nationally as we go through the show. So Faith, thank you.
Thank you.
Our education and events coordinator, who has now been with TMC 2.5 at least, right, Amy?
Going on 3, yeah.
Going on 3 years. It'll be 3 years coming up here later on this summer. And but our education and events coordinator, Amy Bohr. Amy, great to see you. Everybody should be familiar with Amy because she is often on these broadcasts, getting them going. And thank you very much for joining us, Amy. Knowing with our conference in like 12 days, Amy has been, her hair's in a bun, so she doesn't pull it out, right? So, and then one of our newest additions to the Mortgage Collaborative. Something we've been talking about doing for a long time. Like everything we do, it's driven by our lender board of directors and our lenders in general. But just in conversations with our lenders over the course of the last year, really have identified a need to and an opportunity to bring to them some training, learning, development opportunities that maybe don't exist in this quickly evolving mortgage industry. I think one of the things about TMC, there's an advantage of us. We're able to move nimble. We listen to our members. We feel like those two advantages can be very critical in delivering some really compelling learning and development curriculum to our members. And to achieve that goal, we are very lucky to have added our new Vice President, Director of Learning and Development, Stacy Wider. Stacy, thanks for joining us.
Hey, everybody. Thanks for having me, Rich.
Absolutely. So let's go ahead and get into the conversation. And as always, welcome your interaction, questions, comments as we go through the show. But let's start with some of the news headlines. And Tom, I'm going to start with you. One of the headlines that percolating this week, the CFPB and FHFA has also talked about this as well. Just automated appraisals. There's been some evidence of bias potentially in the appraisal world, and maybe some oversight or lack thereof of that industry. I'm not making those accusations. I'm going by what government officials have been talking about, and they've been kind of hinting. They've started to allow desktop appraisals throughout the pandemic, and then recently FHFA came out and announced that they'll be allowing permanently desktops on purchase transactions at 90% or below on owner-occupied properties. And then this week announced that it intends to really continue to put increased focus on automated valuation models to appraise homes, and just their belief that that can be a piece of the pie in terms of putting more worthy buyers of homes into homes, especially at the kind of median to below median income levels. So Tom, you manage our preferred partners, our appraisal partners, a lot of valuation related partners of ours. So turn to you to get your thoughts on this critical topic.
Yeah, absolutely, Rich. And, in reading into just the CFPB's release, I mean, essentially what they're looking to do is ensure that, computer models used to help determine home valuations are accurate and fair. And that, with these new options, they'll be able to be reviewed to determine the potential impact, in particular on small businesses. I pulled a quote from Rohit Chopra saying, it's tempting to think that machines crunching numbers can take the bias out of the equation, but clearly they can't. And this initiative is one of many steps that we at the CFPB are taking to ensure that in-person and algorithmic appraisals are fair and more accurate. Similarly on the topic, we were kind of discussing beforehand, both the GSEs recently focusing as well on identifying disparities for communities and borrowers of color. And, speaking to that, I know Fannie's rolled out Collateral Underwriter as a tool to support the research and analysis, with a robust set of red flags and messages, including triggers for like potential overvaluation risk, appraisal quantity risk, and even property eligibility risk as well. So I know like their fair lending team at Fannie is constantly reviewing these for fair lending purposes. And I think they've announced too that they're also hoping to enhance Collateral Underwriter this year with new messaging for undervaluation risks that'll help lenders address potential biases early in the process. Really a big piece behind that, Rich, is that the appraiser demographics don't represent the American population. I think the latest stats I saw are that 85% of appraisers are white and 78% are male. So it's a big focus as well to having an appraisal workforce that better represents the communities that they work within, I think, to install more confidence in the process and help try to mitigate bias. So last thing I've got on that front is I know both Fannie and Freddie have been working together in a collaboration with the National Urban League to launch the Appraiser Diversity Initiative. It's a couple of years since its inaugural launch, but really designed to attract new entrants into residential appraisal field and kind of help overcome some of the barriers to entry, such as education, training, even experience requirements, to go a long way to help kind of foster that diversity through that joint collaboration. So definitely steps out there between the the regulators in our industry to help address this issue.
Yeah, clearly things going more in this direction, more automated valuations of homes, especially, homes that don't have risk characteristics that are on the high end. And also, I think you've seen this current administration and housing leaders in general just much more willing to embrace the use of data and analytics as opposed to things that have historically been human. So be interesting to see how this all plays out, but clearly FHFA and CFPB eyes squarely focused on automated valuation models. And had a note get dropped in the chat from our good friend Ira Selwyn at US Mortgage Corp. For what it's worth, we've heard about many AMC's appraisers that are not yet ready for the desktop appraisal and the requirements. So not sure how much of an impact we will actually see yet. Might be another case of something sounding great, but will be interesting to see the impact. And yeah, great point, Ira, because all these things sound easy. Oh, let's just more data, more automated appraisals, but there are a reason these things have been human historically, and not quite that easy of a transition to just flip the switch. So Ira, thanks for the feedback there. Next, I'll turn to our VP Member Engagement, Faith Howard Mooney, and Faith, several headlines again in the news kind of related to the wild and crazy start to 2022. Hard to believe we're already almost 2.5 months into it and steamrolling towards spring. But the obviously sad situation going on in Ukraine, it did precipitate the biggest 2-day drop in mortgage rates in some time. Ticked up a little bit over the course of the last day, but saw some pretty significant rate relief over the course of the last week. Home values continue to shatter records. CoreLogic's latest year over year home value index, 19.1% year over year, Jan to Jan. And, most of the economists came out with projections of 2022 home appreciation of between like 5 and 10%, depending on who you look at. But now we're starting to see the revisions already. Fannie Mae came out and changed their revision. I think they officially predicted like 7.5% home price appreciation in 22. They've upped it to like 12% already. I would argue it's going to be higher than that. But and then we've seen for the first time in the MBA's application data, purchases now more than refinances. So with all that backdrop, I just turn to you to give us what you're hearing from our national network of lender members.
That was a lot all in one mouthful, Rich. I'll start with the rates. I don't think that anybody has been surprised with what's happening in Ukraine, that there was a drop in rates. But I also think, and we've got a number, I'm looking at the list over here of our lender members on the call. So please pipe in to the conversation here. I don't think that anybody is thinking that rates slightly above 4 or rates below 4 are really making a difference in what they're seeing that much in volume right now, because there are no houses to buy, or a very limited supply of houses to buy. It may move some of the people in the pipeline that have been sitting on it and just need to see a 3 instead of a 4, but I don't think anybody was surprised by the drop, maybe how quickly it happened. I do think that everyone thinks that, depending on what happens with the situation in Ukraine, that we will be seeing things pop back up over the 4% mark. And that's kind of what everybody's predicted. Fannie's changed forecast was 7.9% to 11.2. Huge difference. It wasn't just a percentage point or two. Half again as much in a year over year price jump. For those of us that own houses, fantastic. Love it. Take advantage of it. For those that are trying to get into the market, again, another barrier for, whoever thought that the median price would be $384. And, some places where you're at, it's way higher than that. So that continues to be another barrier for those people either on the fence or trying to get in for the first time. Year over year home price index from CoreLogic at 19.1%. It's craziness. I mean, it, highest ever since 1976, since they started collecting data. And again, for those of us in a home, fantastic. I mean, we've got appreciation. I think people are planning in the industry to, they're looking at the HELOC environment, which is something that we've talked about. With that kind of appreciation, people probably aren't going to refinance a 2.5% mortgage. They may do something on the second side. And so we have a lot of people within network that are planning programs around second mortgages and what to do with those and those types of things. But
yeah, and the sad part there too is that, you've got 19% home appreciation year over year, but the wage growth is only around 5%. Inflation's up around 7-8% in just recent months. Really just continues to exacerbate the problem we've got going as far as creating affordability in that first-time home buyer segment, and continues to put a squeeze on that buyer segment, which will create challenges for our industry going forward.
So many impediments to first-time home ownership right now, from inventory to wage growth to interest rates being higher and affordability in general. So interesting to see how it all plays out throughout the course of the year. And next, I'll turn to our VP and Director of Learning and Development, Stacy Wider. And Stacy, tasked with delivering amazing learning and development opportunities to our members, a realm that we've started to tiptoe down under Amy's leadership with our TMC Connect series, looking to really take it to the next level and offer curriculum. And in that quest, what better way to deliver the most viable curriculum to the lender members than to bring together a group of a bunch of the best and brightest of them and pick their brain on it. And Stacy, this afternoon, we have the first of a couple different lender advisory panel meetings with some kind of handpicked lender members of ours who were looking to help us guide us into this arena. And but prior to those meetings, you sent a survey out to about 40 individuals, highly respected, really not a lot of people you've seen as co-hosts on this show. And I would love if you could just kind of walk us through some of the results of that survey.
Sure, absolutely. And this is really a big part of the consultative approach that we want to take with the members. Instead of, moving forward and building out a bunch of training and curriculum that we think you need, instead we're going to base it on what you tell us you need. So that's the first part of this survey, this first survey that we sent out to the list of about 40 leaders. And just a couple of quick things that you may find interesting in here. So I always like to ask the question, what training format do you feel like is best when it comes to learning new skills? And 99% of the time, most people say a classroom setting is still the preferred method. And that was true in this survey as well, but getting a lot more traction with the webinars, with live instructors being one of the other preferred formats, pre-recorded videos. Some of the lesser selected options were around training manuals and books and things like that, because those are harder to keep updated. So we're going to continue on with that format. Ideally, classroom instruction is always the best way to go, but certainly there's cost constraints, time constraints. So the next best thing is that webinar-based training with a live instructor. But we'll also be utilizing other methods, micro-learning, blended learning, all kinds of things coming that we're really excited about. Another question, and I don't think this would be a surprise to anyone, but the overwhelming majority, pretty much everyone in the survey responded that upskilling is going to be incredibly important to their team's success this year. As we all have been talking about, and that certainly moving away from the refinance landscape, moving into more of a purchase landscape, and with rates increasing, that really it changes the type of selling or the type of approach that loan officers, of course, need to take in going out and getting that business. So upskilling is definitely an area that we're going to focus on. Another just quick thing here that I wanted to share with you is, speaking of sales, when I sent out this survey, I thought that the most common response would be when I asked, what training topic is most critical in the mortgage industry right now? I figured the first response would be sales training or relationship building training. And that came in a very close second, but the number one selected option was effective communication. And I just, found that very interesting, definitely something that I agree with, but that's going to be an important place for us to start as we build out our curriculum. So those are kind of the highlights on that. Again, as Rich mentioned, we're going to be building out this division. The goal is to take this data, this information that we get from you, and put together a strategy to move forward from for the next 30, 60, 90 days, and definitely leveraging the expertise and insights of our lender advisory panel. So thanks, Rich. Anything you want to add, you're welcome to.
No, thank you. Very, very well put, and really looking forward to our network getting to know Stacy better A wonderful person, great background, so fits our internal and external culture, and just so confident and excited for this new division of TMC that's going to deliver some really exciting stuff. I think it was Mark Cuban that said, listen to your customers, not your competitors. I say it all the time, but it's true. It makes our job very easy. We have a business model where our customers are our lender members nationally. We listen to them in many different ways, many different forums, and then deliver to them what they need and what they want. And sounds simple. It kind of is. Maybe not the execution of it, but the premise of it. So thank you, Stacy.
Thank you.
Now turn to our education and events coordinator, Amy Bohr, who is about ready to execute a 460 person event in Miami. You could never tell. Is she gritting her teeth over there? It's been a stressful couple of weeks for Amy. So, but I wanted to have Amy on because, this special edition of Last Week in Mortgage kind of dedicated to the pulse of the mortgage industry. And our conference agendas are truly the pulse of the mortgage industry. I mean, like the agenda is created. The first step and primary step of the creation of this agenda is a very comprehensive survey. We send about 800 key leaders in our lender member network about 4 months before our events take place, taking their temperature on all the most pertinent issues in the mortgage industry and how important they are to them. And that starts the creation of the agenda process. So I wanted to bring Amy on to kind of roll us through what is a really fabulous agenda for what's going to be an outstanding event coming up here in about a week and a half.
Thanks, Rich. So this is our landing page here, and we roll over to our event schedules. We have made some changes over the years, but we now have some stuff going on Saturday. We have our collab labs that aren't listed on here because they are formulated behind the scenes, but we're now opening registration a little early so people can get their badges early. But we also have this awesome pre-event networking mixer. So folks that like to come in early, we can get together with them as early as the Saturday. Then when we roll into Sunday, obviously our registration, we've got some partner room rentals available too, but then we've got a special invite only sponsored luncheon, sponsored by Total Expert this year. In the past, we've had Fannie Mae sponsor as well. We offer a headshot studio for those folks in our industry who, if you're like me and many people that I know, have not updated your headshot in 20 years. So this is sponsored by ACS. It's a really awesome thing that we have been offering. And a lot of people, I think we had 80 people take advantage of it in LA, which was incredible. So be sure if you're going to be at a conference to stop by and sign up for that if you want some new photos. This is going to be a great session here. It's mergers and acquisitions in mortgage banking. The current climate, we all know that that is going to be, or that is a very hot topic now and in the future. Some awesome speakers there. We've got Chrisman, Keith Little, Scotty Pickle from Celebrity Home Loans. Sure to be a great one. Then we move on to correspondent and wholesale lending channels. These are actually going on at the same time. We love to speak to our newbies, our new lenders that have come on throughout the year, which I think, Rich, what's the number of new lenders we got this year? I should know, 40?
52 last year.
52.
Yeah, which was, I think,
Last
our
year,
biggest,
sorry.
yeah, new year ever. So I've had like
Right.
4 or 5 more already this year. So
And then, yeah, we've got a roundtable discussion on jumbo loans, outlets in the secondary market, another hot topic, as you all know. Our whiteboards, we love our whiteboards. Starting on Sunday, we go into our TMC Emerging Tech Fund, sponsored by Sunlar, with Sandy Selman and Jonathan Freed from the TMC's Emerging Tech Fund. So they will give us all the updates and then some breaks. This is a new addition to our agenda. This was Rich's idea, very cool. This is going to be a moderated debate, so in our general session room, and the debate is about the workforce of tomorrow, so either in office, remote, or hybrid, and we'll have some awesome discussion leaders representing each of those points of view with a moderator. Jim and Jason are going to handle this IMB owner-operator roundtable. That's invite only, very good for our owner-operators. Then we've got the C-suite roundtable, again, lender only, headed up by Lisa Lang and Dave Roberts. And then with the IMB C-suite roundtable. So we like to give everybody their own roundtable here at TMC. Preferred partner advisory council. And then we close it out with our opening reception. So this is where we have a much bigger reception that's going to be on the ocean lawn, and that's sponsored by SnapDocs and Notarized this year. So that's sure to be a lot of fun. Cuban band, some good food.
And if you're joining us, be sure to bring your white or neon apparel, Miami Vice theme, whatever.
We should probably update that. Does it have it in here?
I don't think so, but we can change that.
So we're doing more of a theme for that one this year. We're looking to harness the Miami scene, I guess. So it's wear your coolest Miami gear, and that could be anything from all white to all pink, neon, yellow. Yeah, 80s. So rolling into Monday, big day, long day of sessions, but super excited to have acting director of FHFA, Sandra Thompson, at our general session. She's going to be interviewed by two of our board members, Eric Burgoon and Melissa Langdale. And then we have our lightning showcases. This year we've got 2 rooms sponsored by Eltropy. And you can see here, there's just a ton. We've got 6 subsessions in each room. And a ton of awesome demonstrations.
And Amy, if I may, real quick, just some quick updates on the showcases from prior conferences. So we updated it to a group format this go around, so we could consolidate 3 rooms to 2 rooms, so our lenders don't have to be pitted against presentations they want to see taking place simultaneously. And a great way for our partners to highlight, their mutual synergies with fellow partners within the network and how our lender members can take advantage. So these lightning showcase is going to be a little bit longer per showcase, about 15 minutes this go around compared to 8 in the past, but we're really excited to create this visibility with the great things that our partners in the network are working on.
Cool, thanks, Tom. Again, some more hours to get your headshots in on Monday. We got lunch plans, sponsored by our partner Planet Home Lending. Another meeting on the TMC Emerging Tech, or those are potential meetings, sorry. And then this is another new awesome idea that we've got this year on our agenda, and this is the $100,000 hour. And it's the network's top cost saving ideas you've yet to implement or think about, and that's sponsored by Black Knight. Lender's going to go in there and demonstrate or present some amazing cost saving ideas to our other members. We're really also going into guide to first time home buyers, grants and DPA tools, have some great discussion leaders on there. And then marketing, the evolution of content marketing, how it's changed and where it's going. Emerging market, non-QM and non-conforming loans. Again, a lot of talk about that. Drew Stachak and Robert Sanko to discuss during that one. And then another whiteboard sponsored by Senlar, key elements of an effective recruiting strategy. Let's see, we talk about automation, session on automation with Scott Milner, Brent Stokes, and William Figueroa. What to not cut corners on when implementing automation tech and vendors, another topic that our lenders speak about all the time. One of our favorite topics, fair lending compliance, ensuring your processes are free of all bias. I'm sure everyone is familiar with that and wants to dig in deeper. James Brody from Johnson Thomas, always a great discussion leader on that topic. Identifying and developing future leaders in your organization. Keith Canner and Rob Hender did an amazing job at the 12 Days of TNC, along with this topic, developing a leadership program. So that's going to be an awesome session. And then we are going to be talking about emerging market, construction to perm lending. Again, these are all topics that have come in from our lenders. Whiteboard at 2:30, dramatically reducing company healthcare costs using creative solutions. If you're going to be at conference, I highly suggest that you see this one as well. Some great intel on how to save money with health insurance. I think everybody needs that. After the break, we've got mortgage automation. Allison Johnson and Jody Hall, if you've been on any of our webinars, you know that they are top notch and have great intel, but this is build versus buy, the real world pros and cons of each path. retaining your best people in a virtual world. Melissa Langdale, Teresa Rose. Am I doing enough to protect my company from a cyber attack? Again, this is going to be with Chuck Hubbard and Robert Moore, Inventive, and Ross Mortgage Corporation. Emerging market, home improvement, renovation, and home equity lending. Talked a lot about as well. Jim Bopp from Planet Home Lending and Eric Burgoon going to talk about that. And then another whiteboard, e-closing, Mythbusters, 5 common impediments to lender adoption, real versus perceived, sponsored by Sunlar. Jamie Modern from DocuTech and Bronwyn Morrissey from Notarize will tackle that. We love this new way of doing our reception. So we're breaking it up on Monday. We have a happy hour from 4:30 to 5:30, and then we want to see everybody at 9 downtown this year. So that's sponsored by DocuTech for our late night reception, and Exactus is sponsoring our happy hour. So we've got 2 chances to get together with everybody Monday night. Let's go to Tuesday. General session, 2 keynote speakers this year for our general session on Tuesday. We've got Jerry Howard, President and CEO of the National Association of Home Builders. We've also got Lopa Kalori, who's the Principal Deputy Assistant Secretary, Office of Housing and FHA at the Department of HUD. So she will be interviewed by Jason Marieto, and Jerry Howard will be interviewed by our very own, one of our founders, David Kittle. That's going to be a great general session as well. So more sessions on, culture, creating culture of mortgage automation. Another one on marketing trends for 2022. I shouldn't say another one, but in the marketing realm. Then we've got a capital markets roundtable with Ira Selwyn of US Mortgage Corp, Caleb Burr, Centennial Bank, and then a mortgage servicing roundtable talking about strategies, compliance, and third-party providers. Kelton Carter from Phoenix, Bob Hamilton from Glacier Bancorp, and some other great discussion leaders on that one. This whiteboard on Tuesday, cost to originate. How do you measure it? Again, sponsored by Sunlar, but we've got Michael Jones from Thrive and Ryan Kuby from Annie Mac, 2 awesome discussion leaders. And then if you want to visit James Brody, if you have any questions, he's rented a room, so you can certainly get in touch with him, talk about mortgage banking, legal compliance, or any questions that you may have. Then we go down here, 2022, the year of e-closing mass adoption. How to be as E as can be. So some great discussion leaders here for that one. And then how housing can thrive amid today's political economic turmoil with Kirk Willison from Arch MI and Rob Chrisman on that one as well. Again, instant mortgage approvals, closer to reality than we think. Joe Leone, Femi Ai, Craig Angaro from Annie Mac. Sure to be a very good session. How many more than we have here? So we have a full. And then we move on to how lenders and fintechs can help reduce housing discrimination through emerging technology. iEmergent, Laird Nasuli, awesome. She will be a great presenter there. Randall Gillespie from Thrive, Chris Sims, Brian Young from Home Lending Pal. Another whiteboard, how performance management can positively impact rate and compensation market margins. And then we're going to do a live version of our rundown with Rob and Rich, which we do every Friday at 3 p.m. But we will be doing it this time at conference with Rob and Rich and special guest Mark Tateris from Black Knight Optimal Blue. So be sure to stop in, or that's actually during lunch. So we can check that out. And then some lender-only networking sessions where depositories will be joined by Lance Lemoyne and Mark Fox from Evolve and CNF Mortgage Corporation. The lender-only networker for IMBs and 1 billion and over, Sarah Gonzalez will be there. And then IMBs and 1 billion and under in annual production, Aaron D from Loan People and Tony Butler from Equitable Mortgage. We've got a preferred partner roundtable, and then my personal favorite, the women's networking event, where Lopa Kalori from the Department of HUD is going to join us this year. We're going to be having it over at the Arcadia Pool, and I believe the theme this year is cocktails and conversation. So ladies, look out for your invitation at registration for that one. And then 3 to 5, another new one, we've got a mortgage tech day. This is our TMC Emerging Tech Fund. This is just going to be an amazing new session where people are going to come and present their ideas and talk about mortgage fintech. Stacey, I could actually, or actually we would need Andrea on here for that. So sorry. And then finally, we get to our closing reception, which is going to be on the Glimmer Terrace, sponsored by Simple Nexus, working on some dancers and a DJ and lots of really good food. So I hope to see you guys all there. That was mouthful.
Thank you, Amy.
So much content.
Yeah, no, it's exciting. And I know many in attendance that will be listening to this after live will be there, and looking forward to seeing everybody in about a week and a half, and much warmer weather than Cleveland. So until next week, though, I want to thank you as always for spending 30 minutes of your week with us. We're here every Tuesday at 2 p.m. Eastern for the last week in Mortgage Today. Back next week with our rotating lender member co-host. And until then, have a great rest of the week, everybody. And a big thanks to my TMC teammates for helping me out and joining me on this special episode. So take care, everyone.
Bye, everyone.